All right, in this lesson, we're going to go over interest expense. How do we calculate interest on a bonds payable? Now, if you've calculated interest on a note, there is no difference here. Now, there is a difference when we talk about discount and premium. We will cover that in another lesson. So we're really looking at interest expense here from a bonds payable standpoint or even a notes payable standpoint if everything was issued at fair value. So there was no difference between what is actually owed and what was actually received. So premiums and discounts are not covered in this lesson, but we will cover that in another lesson that has to do with the effective interest method or the straight line method. So this specifically is just how do we calculate interest for that fair value or a regular notes payable. So as an overview here, when a company borrows money from another company, there's always a cost associated with the borrowing. The cost is known as interest expense. So we want to know how to calculate interest expense. Now, generally speaking, the calculation of interest is as follows. We're going to take the principal, multiply it by the annual interest rate, and then we're going to multiply it by the fraction of the annual period. That's going to give us our interest. Remember that most times you're going to get the interest rate and it's going to be based on an annual period, and it's your job to then figure out the fraction of an annual period so that the annual period or the time matches the time frame of the annual interest rate, which is usually annual or year. So let's take a look at an example to help you understand how we calculate this one more time. On September 1, 20X1, assume company A issued $100,000 4.5% 10-year bonds. The company is preparing to close their books on December 31st, 20X1. How much interest does company A need to accrue for that year? What is the journal entry for the interest expense? So we've got our entry, we've got our formula here. We're going to take our principal times our interest rate times our annual periods equals interest. So our principal here is $100,000. So we'll put $100,000 here. We'll multiply by our annual interest rate, which is 4.5%. And we need to get our fraction of the annual period. So the bond was issued on September 1. So that's September, October, November, December. So that is 4 months. So the fraction of an annual period would be 4 months out of a total of 12 months. So we're going to go 4/12 equals, and if we do that calculation, we'll get $1,500. So now that we've got that completed, we know that at the end of the period here, it doesn't say anything about paying. It just says to accrue the interest. So we're going to assume that we haven't paid. So the journal entry that is associated with this is we're going to debit interest expense for $1,500, and we're going to credit interest payable for $1,500. So remember that we're not going to credit the bonds payable. We want to keep the bonds payable exactly what we expect to owe on the bonds payable. So whether it's $100,000 in this case or $1 million in the last lesson, we're going to keep it at $100,000 here at its face value, and then we're going to create an interest payable for the interest amount on the bonds that we borrowed. So don't credit bonds payable, credit interest payable. So bonds are issued either as a discount, a premium, or on fair value. So when you're using the formula for interest expense, we use the same formula for all three bonds. However, the interest rate may be different for premiums and discounts issued bonds. You'll need to use the effective interest method rather than the bond's stated rate, and we'll cover that in a future lesson. So when we calculate interest, we're generally going to use the same formula, but it's a little bit different with our discounts and our premiums, but I'll show you that in another video. So that is interest expense. Hopefully this was just a review because you remember this from the other sections, especially when we talked about receivables or even at the beginning of this section. But if you don't, now you are in tune with interest expense, especially for bonds. So hope you enjoyed this lesson. We'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or clicking the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.